The euro versus US dollar and sterling versus US dollar have had a down and up trading day, almost back to where it started. The dollar versus yen is more to the upside, and I'll talk about the technicals that are driving these three currency pairs to kickstart your day in the U.S. session. So let's get started. A heavy calendar is ahead with durable goods, GDP, initial jobless claims, pending home sales, and lots of Fed speak. But the technicals are telling us their own little story, of course. And we'll start off by taking a look at the euro versus US dollar. From a price action standpoint, the price went to the downside and trading here today and then back to the upside. The downside moved back within this swing area here. We've been talking about that, how the market moved away from that swing area in trading earlier this week. In trading yesterday, we rotated back down into the moving averages here and then rotated to the upside. That stalled right here at the highs and just below the 100-day moving average, which is now at the high of this swing area up to 1.0527, 1.0532, and then rotated back to the downside. We closed within or near the 100, 200-hour moving averages and trading the Asian session. We moved lower, breaking below those moving averages, which is good, but into this swing area once again, and that proved to stall the fall, at least for now, in this pair. And we rotated back to the upside and, back up to our moving averages. So, technicals are doing okay. The volatility is up and down, and that has traders thinking buy the low areas and sell the high areas, like we did here. And in between, we have the moving averages and, to deal with. And if we move above it, it's more bullish. If we stay below it or move below it, it's more bearish. Ultimately, we're going to either need to move to the downside here, in which case we'll look toward the 1.0405 level. Remember, that was a 50% retracement of the move up from the 2022 low to the 2023 high. So the range since 2022, in other words, or we're going to extend it by the 100-day moving average on the top side. This is the wide area through here where we're either going to move lower or we're going to move higher. So pay attention to those levels in between. It's a up and down type of market for the euro versus US dollar. That's what we've been seeing of late in that currency pair. Let's take a look at the dollar versus yen. And speaking of ups and downs, this is the 4-hour chart, and this is the price action this week: up, down, up, down, up, down. In between those ups and downs is the 50% midpoint of the move up from the September low down here to the high price that we saw in the month of January. That 50% retracement comes in at the 149.21 level, and you can see how the price has traded above and below that level all week long. That is indicative of a market that doesn't know which way it wants to go. But we have to respect the 50% as a sort of barometer for bullish above and bearish below. If we trade above it, it's more bullish. If we trade below, it's more bearish. On the top side, we are above it right now, so that's a little bit more. That's more bullish for this. For the dollar versus yen, and we start to look, maybe toward this area right through here around the 150, 40, maybe 50 level, then maybe up 150.91, and then start to look toward the moving averages, maybe this swing area up here. I'm going to take a look at the hourly chart to see if we can get anything more definitive from that, and the more definitive is probably going to be the 200-hour moving average. That level is right here. That comes in at 150.31. So we had this 43-ish type area I was looking at off the 4-hour chart. We haven't been above the 200-hour moving average since back here, which is somewhere around February 13th or 12th, or somewhere around there, where all these moving averages converge. Remember that this this cluster of moving averages here. Well, it did its job of pushing to the downside and then holding the 200-hour moving average here. So this moving average is going to be a key level on the top side that we need to get to and through to increase the bullish bias. Then we start to look toward this double bottom right here, which when we broke here, we saw increased momentum. So getting up to the 150.91 level would be another level, and then we'll look toward this swing area up through here and the 38.2 retracement, the broken 38.2% retracement. On the downside, if we move below the 50% retracement, then we just go down and test the low prices that we saw here, which did a pretty good job of forming a floor 1, 2, 3 days in a row with the price within 10 or so pips of each other on those downside, somewhere around the 148.64, break below that level and opens the door further downside. Finally, let's take a look at the sterling versus US dollar. I'll use the same 1 hour chart. And like the euro versus US dollar moved lower in trading here today and then moved to the upside. If you recall, off the euro versus US dollar, we moved up toward the 100-hour moving average. In this case, we bounced off of the 100-hour moving average. Also recall from previous videos this week that the 100-day moving average was in play all week for the sterling versus US dollar. 1, 2, 3, 4, 5 straight days where the price either traded above and below that 100-day moving average. But in trading yesterday, we broke to the upside, extending above the previous highs, and it looked like we were going to head, that the market was going to finally make its move higher and higher. But we did rotate back to the downside, and I found support against the 100-hour moving average. What we didn't do is we moved back below the 100-day moving average, or let's say this 200-hour moving average. So remember, the cluster of moving averages that we saw on the dollar versus yen. Well, we have a cluster of moving averages on the sterling versus US dollar, 100-hour moving average, 200-hour moving average, 100-day moving average in between them. And ultimately, this is going to be the barometer for bullish above, bearish below. As long as we stay above it, it's more bullish. If we move below it, then the bias turns more to the downside. I would expect that we would look toward this swing area and then potentially move further to the downside in this kind of step fashion with the support down here, 125.49, and then look toward this swing area down through here. So that's pretty much the simple look at this pair. As long as we hold that cluster, we're okay. If we go below, we're not okay for the buyers. So there you have it, a technical look at 3 of the major currency pairs to kickstart your day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.